Hey, what's up you guys? Welcome back to the channel. Thank you so much for tuning in, and if you're new here, welcome to the channel. So hey, in today's video, we're going to be talking about and discussing what is a good stock market return when you are investing into the stock market, but also more particularly when you are buying and investing into individual stocks. So that's what we're going to be covering into today's video. What is a good return when you are investing into individual stocks within the stock market? So if you enjoy videos like this and you're not already subscribed to the channel, be sure that you find that red subscribe button on the bottom right side of your screen. Give that red subscribe button a quick tap, smash the like button on this video, and with that being said, let's go ahead and get right into today's video. Alright you guys, so my goal with this video is to help you learn what is a good stock market return when you're making investments into individual stocks. Now, in order to make that possible, you got to know, okay, in order to know what's a bad investment or what's a low return, for an individual stock investment, or what's a high return, you got to kind of know like, well, what's an average? Like what's just kind of like what's an average rate of return, for investing into individual stocks? Well, this is how I would say that you could look at it, because I don't think you want to just say, oh, let me look at like what's the average rate of return for investing into individual stocks. I think you want to know, when you are investing into individual stocks, does it make sense for you to get into an investment that gives you lesser than what is the average rate of return within the stock market, right? So the average rate of return over the stock market's history through investing into like the S&P 500, which is basically the index that tracks the performance of the overall stock market, or a very large group of companies, which is roughly like 500 of the largest corporations here in America. And that gives you a very strong representation of the stock market's general return. So if you are invested into the S&P 500, you're going to get an average return, right? So what is the average that the S&P 500 has performed over the history of the stock market? Well, the S&P 500 went into effect and was introduced into the stock market in 1957. And since its inception, since the beginning of 1957, the S&P 500 has produced and has returned investors 10% annually since the beginning, since it was introduced into the stock market, right? So the way that I would look at things if I was an investor, which I am, and I'm sure that you are watching this video, I hope you are an investor as well. So when you're making your investments and you're looking at, should I invest into this individual stock? Is this a good investment? One of the things that you want to consider is saying, okay, if I'm the whole reason why you would even invest into an individual stock rather than something like an index fund is because an index fund is going to give you an average return, right? And if that's what you want, and there's reasons why somebody would want, just the average return, because maybe they don't want to take the time, to do the extra work of like researching. They don't want to deal with the headaches or the problems that come associated with investing into individual stocks. So there is a place, and there is, a reason, and there is a type of person where it makes sense for them to invest into, something like an index fund or ETF. So, but if you're that other type of person like myself who desires a better than average return, and you're willing to put in the time and the effort and the research, then that is where you would look at investing into individual stocks, because you are now looking to handpick select investments and invest heavily into those investments for the hopes of a significantly better return than just an average return like you would get by investing into like something like an ETF or an index fund. So if the stock market, as a whole, generally across the board, gives investors an average annual rate of return of roughly 10%, and that 10% rate of return is not adjusted for inflation. So if you factor in inflation, you're probably looking at, something like a 7% return, maybe like an 8% annual rate of return, right? After you factor in inflation. So with that being said, the way that I think you want to look at selecting your individual companies or stocks that you want to invest into, this is how you would determine whether or not this is a good return that you would, whether or not this is a good stock that you should invest in. To at least one of the things that you want to ask yourself is like, okay, what is the type of average return, or what is, the returns look like lately within, the past history of this company that you're looking to invest into. So as you look over, the company, and you realize like, okay, maybe over like the past 5 years, right? And then you look and say, okay, well, this company's returned, 5% annually over the last 5 years. Well, then, at least in my opinion, that would be like a terrible investment for you to go and invest your money and risk getting a 5% return or a even less return, or even worse. I don't know why you would go into that investment unless you know something that nobody else knows about how you would hope to get higher than a 5% rate of return, because that stock has shown you no reason to believe that it could get you a better than a 5% rate of return. So, and why would you just take all that unnecessary risk that comes with investing into an individual stock to get a 5% rate of return, or hope to get better than a 5% rate of return, when you can just invest in something like an index fund and you're going to get an average of an annual rate of 10% rate of return, right? So that, I feel like, is the measuring stick, is that like if the individual stock or company is going to get you less than a 10% annual rate of return, well then obviously like the safe bet would just be, why take that risk of investing into an individual stock if it's going to get you either a 10% annual rate of return or less? You would just be far better off investing into something like an index fund, or just simply not investing into the index fund or that particular, individual stock. So the way that I would describe it is like, if you're going to invest into, or you're looking to invest into an individual, stock or company, and that individual stock or company is looking like it's going to give you less than a 10% annual rate of return, well then, I mean, come on, like, I would hope you would not pick that investment. Or especially after watching this video, you'd realize like, hey, well, the stock market is going to give me an annual average rate of 10% annual rate of return. So why would I pick this stock that's going to give me anything less than that, right? You're basically taking on more risk for a lesser return, or even maybe like an average return of the 10% at best. So that would be like, I feel like, a terrible investment. You would be far better served to just go ahead and pick either not investing into that stock at all, just eliminate that and move on and start checking out the next company. Or if you're just like, hey, you know what, I just want to be invested and I don't see any good individual stocks, or at least none that you're comfortable with, well then you're better off just going ahead and sticking with the index fund. Now at the same time, if you don't want to go the index fund route like myself, and then you say, okay, well, what's a good stock market, return for a good individual company or a good individual stock to invest in? I believe a good stock market return for an individual stock investment is going to be anything beyond that average return that you would get by investing into the S&P 500, or those index funds that track the performance of the S&P 500. So if the S&P 500 is going to get you an average annual rate of return of 10%, or adjusted for inflation, more like a 7 or an 8% rate of return, then I would say any individual stock that can get you, I would say anything obviously beyond 10% is going to mean that it's a good individual stock, as far as like, just the return that it's giving you. Obviously you would look into a lot more things than just the return, but if an individual stock is giving you a better than average rate of return of the stock market, well then I think that's definitely, one trait to look for in a really great individual stock. But I would probably say, when I'm looking at stocks, that I wouldn't just be like, oh, let me look for stocks that are 11 or 12. I would probably aim for looking at a company that is going to give me something more like a 15 or a 20 or maybe like a 25 or 30% rate of return. Because what you got to realize, as one, you're taking more risk, right, to get into these companies, and you can like, mitigate or like limit some of the risk by simply just taking the time to do the research and very well understand the company that you're going to invest your money behind before you put your money into it, right? So that helps you limit the risk, because the better you understand the business and how they make their money, what type of company they are, and what type of situation that they're in, the much better aware of the much more you should be aware of whether this is a quality business or a quality investment for you to get into. So I feel like, because you're more educated, because you've took the time and done the research, well then there's going to be less risk for you. So it's like less downside and more upside. And then as you look at the track history of that investment, if you realize like, hey, everything that I could see, tells me this is a great business. And then you look and say, okay, what type of returns has it generated, over like the past 5 years? And then you realize like, hey, it's been like averaging, a 20% annual rate of return. Well, that's great, because that means this individual stock or this individual business has basically given you an average of double the annual rate of return that you would have got had you just invested into something like an index fund or an ETF. So the simple fact that it gives you a much better rate of return than just the average annual rate of return in the stock market is one sign that lets you know, hey, this is, a significantly better investment, at least from just the overall stock market returns that you would get had you just invested into something like, the stock market, like the S&P 500 index. So I think a good return is going to be any type of individual stock or business that gives you a rate that's better than the average, which is the 10% annual rate of return that we had, just discussed earlier in this video. So if the individual stock gets you a better rate of return than 10% annually, I think that makes it a good stock market return for an individual stock. And if it gives you anything less than that 10% annual rate of return, then I think, you probably want to just go ahead and move away from that individual stock investment. You want to just basically cross that one off your list and look for a better option. And if you can't find a better option, then, maybe either don't invest at all or maybe look at something like the index fund. So, hey, now you guys know what is a good stock market return. A good stock market return is a stock market return for that individual stock that is going to give you better than the average rate of return. And we know now that the average annual rate of return for the stock market is roughly 10%, or like 7 or 8 when you adjust it for inflation. So hey, look, if you guys are not currently invested into the stock market and you're looking for a really great, investing platform to get involved with, down in the description box of this video, I'm going to put a link to M1 Finance. It's a really great, investing platform. So be sure to head down to the description box of this video, click that link, sign up with M1 Finance, and you're going to see it's a really great, investing platform for you to use. I use M1 Finance. I don't think you're going to be disappointed. And that's exactly why I want to recommend it to you guys, because I think, you guys are going to find it's a really great product for you guys, and you're just going to get a great overall experience. So head down to the description box, click that M1 Finance link, sign up with M1 Finance, and be sure to give this video a like, smash the thumbs up button, and if you're not already subscribed to this channel, be sure to hit that red subscribe button on the bottom right side of your screen, so that way you'll be notified each and every time I upload a video, and I upload videos each and every single Monday. So thank you guys so much for watching, and if you would like to catch another video from me, be sure to click this video here on the screen, and YouTube is going to show you the very best video for you from my channel.